Good morning, family. It is the day after sports day here in Japan. My name is Trey McKee. I wanted to talk a little bit about Microsoft today, but before we get into that, I wanted to talk a little bit about the broader market conditions and kind of the weird things that are happening right now. One of the really interesting things that we need to look out for when choosing stocks to invest in is kind of like what are the hot stocks that are in the spotlight. Right now, you might say like Shopify, Tesla, to some degree like Amazon, things like that, where it's just like people are like, I don't care about the fundamentals, I don't care how many sales they have or don't have, I don't care how high it goes, I'm just going to throw all my money at it. Those kinds of stocks are generally like people tend to get caught up in them with their heart rather than analyzing the numbers and just going into them. You know, I'm not saying Shopify and Tesla and Amazon aren't growing, because they are, but one of the tricky things that happens is that you end up kind of being like, should I buy Tesla at 1,300 or 1,500 or 1,700? Is it going to be okay? And then you get into this panic mode, like if you put your life savings in at 1,700, which was kind of like its peak ever, right now you'd be crying because it's like 1,400 or something like that. But if you're thinking in the mode of like over the next 3 to 5 years, then it's probably going to be all right, you know. One of the really interesting things about the Microsoft stock is that, you know, you have this spotlight where all these stocks are super hot and therefore super expensive because people don't care about the figures involved with them. I feel like Microsoft is kind of out on this rim, this edge, where it's kind of like not super sexy and people aren't like, oh my gosh, I have to buy Microsoft now with all of my money kind of thing. And because of that, you can be a little bit more rational with the evaluations and the numbers. And because of that, I think there's a little bit of an opportunity here with Microsoft. And I'm going to share a little bit more about why that's the case. So Microsoft has been around for a long time. Most of us grew up with it or have seen it grown if you're a little bit older than me. I grew up using DOS and then Windows 3 and all that stuff, and then eventually going on for years and years and years. I mentioned in my Apple video that I was a hardcore Windows user my entire life. And I think in my mind, Windows equals, you know, Windows XP and like, you know, Windows 10 and all these different things. But I've been digging into Microsoft more over the last few weeks and learning a lot more about how it's evolved drastically and why I think it's one of those stocks where it's like the people who get it are just going to, you know, regularly putting money in there until the cows come home. But the people who don't get it are kind of just going to like, Windows isn't a big thing anymore. I'm a Mac user or something like that. And I think it can't be one of those sexy hot stocks anymore. And so that's an opportunity because the P/E ratios aren't going to be super bonkers and they actually have really good growth going on in a lot of different sectors. Before we go into the analysis, I wanted to break down a couple of terms that Microsoft explains on their website. These are kind of new things that have come into being extremely important in the last few years. And I learned a lot by doing research on these things. And by understanding them, I'm starting to understand why Microsoft is so valuable and why it's one of those stocks that's probably pretty good to be putting a little bit of money in here and there for a very long time. The first one is Platform as a Service, PaaS. People in Silicon Valley might call it PaaS, or maybe more people do, I don't know. Microsoft says, Platform as a Service is a complete development and deployment environment in the cloud, with resources that enable you to deliver everything from simple cloud-based apps to sophisticated cloud-enabled enterprise applications. So Platform as a Service is starting to be one of Microsoft's really big core things that's growing rapidly. If you're familiar with things like Google Sheets, or if you've used any of Google's productivity suite online, imagine your company has 10,000 people and you wanted to build a similar type of app that only people in your company can use. When I worked back in insurance for a few years, we were using software every single day that was just for that company. It was like a specialized thing for that company that helped us make quotes and helped us evaluate clients and stuff like that. So imagine you had a big company like this and you wanted to make an app that everybody in your company could use and it would be connected on the cloud and everybody could be communicating and team working together. You might go and take advantage of Platform as a Service. So that's number one. Number two is Infrastructure as a Service. Microsoft says infrastructure as a service is an instant computing infrastructure provisioned and managed over the internet. A cloud computing service provider, such as Azure, manages the infrastructure while you purchase, install, configure, and manage your own software, operating systems, middleware, and applications. So, growing up over the last 30 years, we have always thought of computers as something you go to the store and you put together, or you just buy it and then you use it, and all of the processing power is happening in that box, and all of the graphics processing and all that stuff is happening in that box. And little by little, we started to make servers and hosts and things like that, where more and more processing and more handling of tasks is happening in a different location. Now, as the internet grows and internet speeds increase, now we can do more and more of our processing outside of our own little box or our own little phone in our hand or in a room. One example is like Google Stadia, where it's like you don't even need a good computer, but you can be playing really graphically intense video games, and Google's computers are doing all of the processing and sending that information over to you. So infrastructure as a service is another one of Microsoft's really big undertakings that's going to be impacting the world in a really big way in the coming years. So if you've ever worked in an office ever anywhere, you probably are familiar with the fact that Microsoft Office and Microsoft Windows are kind of like the main tools of the trade for everybody everywhere at almost every company. It seems like Apple stuff is starting to become a little bit more common and a little bit more used in offices, but in general, I think far and away, Windows dominates. So one of the tricky things for companies, let's say you have 10,000 people and you have a bunch of old people who don't like learning new things and people who've gotten used to this software. They already know how to do all of their tasks and handle all of their responsibilities with like an Office product from 10 years ago. And then you come in and we're like, hey, we're going to make things high tech, we're going to make things more efficient and more productive, and we're going to move everything onto the cloud. Oftentimes in big companies, when they try to implement new systems, which actually should be making things more productive, what ends up happening is that it slows down productivity drastically for a couple of years. And one of the really neat things Microsoft is offering in this transition to a lot more cloud-based services on their premises is that Microsoft isn't demanding, hey, that version is done, now you must adapt to this new version, get on board, or your company's jacked. Microsoft is really taking like a gentle approach of like, let's transition slowly. And so this word is hybrid cloud, where it's kind of like, yeah, you can keep using your old servers, we can phase them out over the years, and as you're phasing those things out, we can get your team and your tech team and your skills kind of up to the new standards using more cloud technology, where you don't need to be having huge, powerful computers in your buildings doing all the processing. Just outsource that to us, and we can do that now because the internet's so fast. And we have technologies that really allow that. So hybrid cloud services like Azure, Microsoft's Azure, and also Amazon Web Services, there are like a lot of other companies that are doing these kinds of things. Really seems to be kind of the future, but I can also see at the same time a really big part of the investing community is kind of like, I don't really get that, so I'm just going to stay away from it. Which generally is a good idea. Like, don't be investing in things you don't really understand. You want to be able to explain to like a 10-year-old, like, hey, this is why this company is going to grow, and this is why I invest in it. So you may have heard about Azure before, and it's becoming a really, really big thing. Their revenues have surpassed $50 billion kind of in the last fiscal year, which is tremendous, and is becoming a larger and larger part of Microsoft's revenue streams. One of the things that's tricky when analyzing a really big company like Microsoft is that they have so many different revenue streams that are so varied, growing up looking at Office, like, it'd be like Microsoft Office, okay, buy it for $100. How is that going to make the company grow that much? One of the really big trends now is switching from buying like $200 or $300 or $500 productivity suites into monthly recurring revenue. I'm going to put a chart up here on the screen that shows kind of how Microsoft's various departments have been growing over the years, and it's pretty exciting. So these figures here are what percent it grew in that quarter. So we're looking all the way on the top right at Azure's fourth quarter 2020, which was the most recent one. Even now, it's still growing at 47% per quarter. It looks like it's slowing down, going back to like 2017 on the top left. 97% growth per quarter, 90%, 98%. Like, those are bonkers numbers for a company that's that big. We can go all the way down the road here. We see cloud services, 13%. Office 365 commercial, 19%. Dude, so Google offers free productivity suite. My entire company runs off of Google's free productivity suite. There are still millions and millions of individual users as well as companies that are like, please take my $60 per month per user forever so that we can use Office 365. That's how much of a stronghold Office and Microsoft has on so much of the business community. And that really shows that they have a wide moat. They're really well protected. If your competitors can come in and offer the same service for free and people don't switch in droves, that means people really are loyal to your company. And that's something that I think Microsoft has that's really special. We talked last week about Costco, which has similar numbers. Click up here if you want to see that Costco video. And I think loyalty to a company and stickiness of that brand is just so attractive to stockholders and potential stockholders like you and I. Search ads make up a much smaller part of the overall revenue picture for the company. It's easy to look at this chart and assume that all of these have equal weights inside the company, but actually they don't. Cloud services and server products up 19%. And this is another really big highlight on the bottom right. Xbox content and services up 65% this quarter. We're seeing similar phenomena with like Animal Crossing being like the fastest selling game of all time and things like that. When you're locked at home, you play video games. As you know, I got my Switch right over there, playing a lot of video games, you know. And so Xbox products have been growing crazy. And that's also a really good sign because the market seems to be, as far as videos go, I'm not like an analyst on the video game market, I just play them. But it seems to be more and more focusing on like a couple of players. And I didn't know Xbox was so big. Here in Japan, Xbox isn't even a thing. So seeing that they're growing really well in other markets is really encouraging for me as a stockholder. So I'm going to go a little bit more into detail, zoom in on some of these numbers. We have productivity and business processes, which contains Office, LinkedIn, and various other things. It brought in $11.75 billion, which is up 6% in the last quarter. LinkedIn even grew 10%. That's LinkedIn's slowest growth since 2017. But if it's still growing 10%, I'm like, dude, I didn't know anybody used LinkedIn still. But when I look at these numbers, it's kind of like, whoa, I need to do more research. Then I found out that LinkedIn is still basically considered to be the premier professional networking tool. Here's some more figures on LinkedIn for you. It makes up 5% of Microsoft's revenue. They have 600 million users, although they're not providing figures on the monthly active users anymore like Facebook does. They used to provide that information, but they don't anymore, unfortunately. Just know that LinkedIn is still growing. I was talking earlier about Office and Office 365. Those account for 26% of all revenues. Office 365 commercial is growing at 19%, and other Office products are growing at 5 and 6%. And all these combined together make up 26% of the company's entire revenue. Office 365 has 165 million subscribers, and this number seems to be growing as people are weaning off of Office onto the monthly subscription model. Moving on to server products and cloud services, Microsoft remains the dominant force in the market, even while Linux is free. Linux offers a really good product for servers, and many people love it. But again, like my example with Google Productivity Suite versus Office, it's kind of like that with Linux versus Microsoft server products. People are willing to pay for Microsoft even though there's a really competent free version of a competitor's product. And it's kind of like Microsoft really has a good hold on so many different businesses throughout the world. That being said, growth is slowing down in this section, but it's still at 19% plus as we saw in the chart here. The more personal computing unit made up of like Windows and Xbox and those types of like personal computing products is doing 12.9 billion in sales and makes up a good chunk of Microsoft's total revenues as well. Microsoft also has numerous acquisitions or potential acquisitions on the horizon, and despite all of the recent upheaval with the pandemic, we're still seeing kind of like an 8-7% growth each quarter on the whole. And since 2020 started, Microsoft is up 34%. That's a testament on one hand to the fact that it dropped a lot, but that's also showing how stable and how strong and how dependable they can be going into the future here, despite, all this market trouble. One of the interesting trends that we're seeing is that there's a greater shift away from brick and mortar, like actual stores and stuff like that, to doing stuff online. And Microsoft has set itself up to be behind the scenes running a lot of the stuff that is making all of that possible, using like cloud services and powering the companies that allow you to make an online store and stuff like that. I wanted to dig in a little bit more to some of the specific figures. Here we have the price, $202 a share, with a 52-week range of 130 to 216. So we're up towards the higher end. We've seen a good recovery. I personally feel like you shouldn't shy away from the stock if you're thinking about getting into it long term, just because it's kind of up towards that 52-week high. Going on to the estimated sales growth, as mentioned a minute ago, we're looking at kind of 8 to 10% per year coming up. Earnings per share, $5.77. In the most recent earnings call they just finished a couple days ago, they were saying $1.46 per share, which beat the expectation of $1.34 per share. Revenues came in at $38 billion for the quarter, above the expectation of 36.5, which was really good. P ratio is 35. In previous videos, when stocks have P ratios this kind of high, I'm like, oh, that's a little bit rich, that's a little bit expensive. But I feel a little bit differently with Microsoft because we're seeing how much it's holding on and how much it continues to grow. It might be one of those stocks where you're kind of like, it never really goes below 35 or 30 kind of thing. And so if you're just kind of like dollar costing in over the years, I'm pretty sure you'll turn out to be pretty happy with that decision in the long run. Here we have the forward P ratio of 27. For you dividend lovers, quarterly dividend of 51 cents, which makes up an annual dividend of $2.04. Their yield is only 0.96%, so that's not a super motivating reason to get in on it. That being said, I think we can really be excited about how safe this dividend is going to be. Don't get into Microsoft just for the dividend, but if you're in it for the long term, for the growth, and a little bit of dividend, then it's going to be pretty safe. It's not going to go away, I don't think. Another really appealing thing about Microsoft, which also I think is one of the reasons the P ratio is higher, is because it's so safe. I mentioned that dividend, but they also have a huge amount of cash piled up. Their debts are low, as I'll show you in a second with these ratios. The current ratio is total current assets divided by total current liabilities, and we can see that it's kind of always above 2. The 3-year average is 2.64, looking at the last 3 completed years. So that means that the total number of their assets is more than 200% more than their current liabilities, which is a big sense of relief and security for investors thinking about the long term. Their debt to capital ratio is only 45.8%. Revenue grew 12.8% year over year to $38 billion for the June quarter, which they just reported on a couple of days ago. In that revenue, they mentioned that intelligent cloud revenues have increased 27% to $35 billion, and productivity and business processes have increased 15% to almost $35 billion. And I just wanted to highlight some of the longer term figures for you. The 3-year sales growth is at 14%, safely higher than the S&P 500 average of 12.8%. And again, take that with a grain of salt because not everything in the S&P 500 is in the same industry. An industry's typical returns can vary significantly. 3-year earnings per share growth, 21%. The long-term growth rate for 3 to 5 years is 15%, which is delightful. And the 3-year dividend growth is 9.2%. And then finally, I wanted to look at the net margin for the most recently completed quarter of 33.4%. For a company this big that has such a stronghold in so many businesses, so many companies, so many homes even, and is continuing to show a strong 8 to 10% growth, as well as investing in new different parts of the market and things like that, then I think as a stockholder, that's not a bad choice. That's actually quite a good choice. You want to be able to put your money in a company where it's going to be growing little by little over the years. Depends a little bit on your personal investing style. Again, Microsoft isn't one of those companies that's going to be, double or triple the stock price in a year or two. But it's one of those slightly unsexy ones that's kind of like, just buy a little bit here and there, buy a little bit here and there, dollar cost in over the years, and you're probably going to be doing pretty good in 5, 10, 20 years down the line. So that wraps up my quick analysis on Microsoft. I'm continuing to dollar cost in over the years, and the question I had for you guys, and I want to hear your thoughts on this in the comments, I wanted to hear your thoughts about whether or not I should do analyses of similar type companies like Oracle, Adobe, SAP, Salesforce. A lot of these have a bunch of overlapping areas with Microsoft. If you would like to see those reviews, analyses, or even comparisons, please leave a comment below. Have a great day and enjoy your weekend. Thanks, guys.